Hi everyone, in this video what I want to talk to you about is the importance of deciding what kind of trader or investor you're going to be. And actually, is trading suited to you or investing suited to you? What is the difference between trading and investing? And how do you decide which is best for you? Because that's critical to making money. If you try to be a trader when actually your personality and mentality is suited towards being an investor, you're going to fail. And equally vice versa. If you try to be an investor but lack the patience to be an investor, lack the tools, lack the knowledge and the strategies to be an investor and how to make money over the long term, then again you'll fail and you'd be better off trading more actively. I'm also going to run through some of the benefits of each type of trading. So let's just get started. Let's just kick off right away into all of that. Now, first of all, what you can see here is the difference between the two. Let me just highlight what the difference between the trader and the investor is in all of this. First of all, what you can see with a trader is they go through all of those turmoils. You know, they're seeing a market go up and down, up and down. They see it go through yo-yos. It might go down, it might go up, and of course that means they've got to be on the ball all the time. But the benefit is, unlike a buy and hold investor, unlike an investor, they are not just subject to doing nothing when the market drops. An investor just buys and holds, so he has no choice but to see the market turmoil and go through all the difficulties and the hangovers and the banging their heads on the table as the market drops. So there's benefits and advantages, and let me just go through them again in more detail. An investor is passive. They sit there, they pick something, and they're going to hold it for a number of years. A trader buys and holds. I've picked an old chart here. I've picked one very old, and the reason for that is because I wanted to show an extreme market move before the credit crunch, to remind people it's not just at times of the credit crunch, but well before then. Cyclically, every 5 or 6 years, we get these massive drops, and we had one after the dot-com boom and bubble as well. And if I went further back, I could have showed you 1993, I could have showed you 1987, and so on, all the way back to, say, 1929, when you had sharp falls. So what you've got with the investor, as I said, you've got somebody who buys, they hold, they're passive. Now, the advantage with that is nothing moves them. They don't ever have to panic. But of course, the problem is they're scared. You know, something drops off and they're looking at it and thinking, surely I should do something. Surely I should do something. This is not right. What do I do? This is painful. I'm just watching the market fall. Of course, the benefits of that is they're thinking, hey, I don't need to worry about anything. I've bought and held for the long term, so I don't need to do anything. So how do you pick the kind of securities, the stocks, where you think, hey, I bought and hold for the long term, it'll come back? And how do you pick the ones where, as a trader, you say to yourself, well, look, I'm active. I'm going to be reacting. When it goes up, I want to be buying. When it goes down, I want to be selling, and so on. I'm going to make money whether the market rises or falls, but that means I've got to be active. I've got to be on the case. How do you decide whether your personality is suited towards just watching the markets all the time and saying, right, I want to be moving, I want to be on the ball. I don't just want to buy and hold when it drops. I'd be scared to do that. I want to be on the case. I want to be actively involved with the market. I want to be reacting quickly. Or how do you decide your personality is better? You know what? I just want the market to do its thing. Doesn't matter. I want to be calm, cool, and collected. And of course, a lot will depend on whether or not you've got a day job. If you've got a day job, it's going to be difficult unless you're trading outside of your day job hours. For instance, in the foreign exchange market, and we'll look at that later. It's going to be difficult to be trading actively because, of course, you're at work. And if you're at work, you're not going to be able to do that, of course. So one of the key aspects we've got to decide is, can we trade outside of working hours? And I'll show you how we do that with the foreign exchange market. And we decide whether our personality is suited to minute by minute or hour by hour or day by day movements on the on stocks and foreign exchange and the index, all for greater returns, of course. That's our job. Now, the idea with a trader is they get greater returns because, unlike a buy and hold investor, look at this guy. From 1999 to 2006, I said it's an old chart, but I wanted to show you the most extreme moves that we've had over the past over 10 years. They got a 0% return. Yeah? over 6 years. Whereas the trader hopefully made money as the market fell, made money as it rose, made money as it fell, and so on. So the trader should make more, but it has a more active, a more time-intensive personality and requirements. So they're going to be obviously spending a lot more time on the market. Okay, well, what are my favorite types of trading? Well, I've got to tell you, I actually do prefer trading as opposed to investing. That's not to say there's anything wrong with investing, and I'll show you, we'll talk about investing as we go forward, but you can see why I prefer trading is because, as I'll show you later, with something like the foreign exchange market and also with stocks, you make profits as the market falls. Of course, as it goes sideways, it's going to be a difficult period. You might get caught out. You spend a lot of time trading. A lot of time could be wasted making next to no money. And then you make money as it rises and so on. Whereas if you're just buying and holding, you might be waiting a long time. Here in this case was sort of 7-8 months. You're waiting 8 months and nothing happens. You just end up where you were. So I prefer trading because there is the greater potential for more money. Doesn't mean it's guaranteed. Nothing's guaranteed. But there's at least more potential. And because I can be in and out of the market, in a way, there's less risk with trading because I'm in and out. I'm in there and I'm out there. But of course, because you're active, potentially, if you do it wrong, and you don't have the right strategies, you could end up losing more money because you're constantly trading and constantly losing money. That's why having the right strategies is important, and that's what I'm here to teach you. So we'll go through some of the most important strategies. It's also my favorite type of trading because in the old days, with trading, you had to be on the ball. You had to know things that only the banks knew. Now, with all the technology, and I'll show you some of the best websites for information and strategies that professional traders use, we've all got an advantage without having 100 screens around us. And that's great because we're all on a level playing field. We don't need to be at a bank anymore to succeed. But also I like trading because if you automate some of the parts where you get buy and sell signals, and that's what I'm going to teach you as well, then you've got a lot of freedom to smell the roses. If you automate as much as possible, and that's my job as well to teach you, then you can have the best of both worlds. You can trade and be active, but have a degree of being passive because the computer does all the hard work for you. And that getting that right balance requires an expert, and I say that's my job, is to show you that. But it's also my favorite type of trading because we live in a world now where actually you've got so much information, but you don't need that information if you pick the right strategies. We're going to pick strategies where we don't need to be constantly on our iPads, our websites, our Blackberries, our iPhones, and so on. We're going to pick strategies which don't rely on news, because if they did, we'd be spending so much time. We want to be looking at making money without spending and wasting all our time, because of course time is money. So for that reason, we're going to be careful not to constantly be only on the computer all the time. That's no good for any of us. And so those are the strategies that I try and teach, well, I do succeed in teaching all my students. But also it's my favorite type of trading, as opposed to just buying and holding, because let me tell you what this chart shows. In yellow, it shows the S&P 500. So that's a buy and hold, a very passive buy and hold strategy. And all that's happened is you've ended up with nothing. From 1997 all the way up to 2011, actually until 2012, you got a 0% return on the S&P 500. So what's that? That's like 14 for 15 years. Over 15 years you got nothing. This is a famous hedge fund. We're not necessarily going to be the best hedge fund in the world, but that's an active trading, momentum following hedge fund, and I'll show momentum strategies later, and that gradually increased and obviously quadrupled the money over the same time. That's what trading does, as opposed to passive buy and hold at its best. We've got to make sure we have those strategies and we're at our best. So there, what you have in summary is, first of all, deciding what kind of personality we have, and then working out, okay, what are the right strategies? How do I use technology to be a trader? Or, this isn't for me, it's too complicated, Alpesh, tell me about buying and holding, and I'll do that as well, of course. This is the first dip into it. It's an overview into all the things I'm going to be talking about. How to trade, how to find those strategies, how to save time, and then deciding whether we want to be trading or investing and over what time frame. So this was an overview and some of the pros and cons of trading versus investing as well.